Alright, you guys, so we are going to do a quick video. As you are aware, I'm sure, and the reason you're watching this video is because the markets have been selling off. We had a little bit of a bounce today, so this is going to be yesterday from when you see this video. I want to give you a quick recap, a quick analysis of what I plan on doing and why I believe that this bounce is not going to last and why you need to not be getting in the stock market right now if you're going long. Let's talk about all this real quick. I want this to be like a quick video all today on Young Money Investments. Alright, you guys, so before I film this video, I kind of love to go through and do a lot more market research and really add to the value of the content for you guys. That's why I do ask for the thumbs up. But as I was doing that and going through a lot of the news articles and everything, I came across this article that I really wanted to share. So if you take a look at this article here that I found on CNBC, it says the stock market is exactly where it was at 1 year ago. Cameron, you're telling me the stock market is in the same place as it was 365 days ago? Yeah, that's exactly what I'm saying. It just look at the numbers. I don't believe you. That you know what's gone on in the markets. Do you know the craziness that's gone on? There's no way that's right. All right, let's just look. Just look with me. All right, let's take a look. As you can see, so in this article, I found it super interesting. The S&P 500 just traded at 2851.67. 1 year ago Tuesday, the index closed at 2850.4. Basically, it goes to talk about, all the year-long volatility. The S&P 500 is still up more than 30% since Donald Trump was elected. Now, this is in no way meant to be a pro-Trump video or anything like that, but what I really want to focus on is this 1 year and how so much has changed, but so much has not changed at the same time. So if we simply look at this chart here, this is the 1 day, 1 year chart for the S&P 500 or the SPY index. If we zoom in here a little bit more, you're going to see that this literally, like I kid you not, literally from the 1 year mark till now is basically at the same exact price point. Like we have not really moved in a whole year. Now, with that being said, from where we are currently to the lows, you're looking at about a 17.66% change. From up to the highs, you're looking at about a 6.66 to 7% change. So the markets have changed roughly about 30%, but overall in 1 year's time, you've really not seen much change in the overall market. Now, my point in sharing this information with you is because I want you to understand that you probably are scared, you probably are concerned, you're probably watching this video to go, I want to know whether I should long it or whether I should short it. And the reality is what really it boils down to is you being able to have the patience and the mental fortitude to understand that the markets will fluctuate, but overall they end up balancing each other out. Things are going to sell off, things are going to come back. You just have to be patient. Patience is my key in today's video, and I'm going to get into this a little bit more in depth in today's video talk. Catch it. I hope you like this video. Like I said, hit the thumbs up button if you haven't already. Hit the subscribe, bell notification, all that stuff. I love making content for you guys. Today, we are going to be talking about my take on the market sell-off, what my plans are, what some of my thoughts are, kind of the psychology that is going through my mind and why I am actually not going long yet and playing this bounce play right now. One of the things that I've been getting a lot of questions on in my private mentorship from my students right now is, are you going to start buying the dip, buying the bounce? And the thing that I've also told a lot of them is that right now it is a very tumultuous market. There's a couple things going on that really leave me to believe that we have not seen the bottom yet. One of the things that I started thinking about, especially this being day 2 after the Trump tweets, and seeing the market slide down, as you can see kind of over here, you can see all this stuff. You can see a lot of the articles that Trump, talking about the market selling off. You can see some of the tweets and those kinds of things. There has been quite a bit of issue obviously going on lately with the trade war talk. That I believe it's $300 billion worth of Chinese goods that are getting tariffs placed on them as of September 1st. That caused the market sell off nearly 1,000 points, I believe, if memory serves me correctly, on Monday. Now today, on Tuesday, we saw quite a bounce. Now I'm interested to see what we will see on Wednesday, tomorrow, Thursday, Friday going into this. But the thing you need to remember, and the reason why I'm not buying this dip yet, is it makes no sense for the markets to sell off so much on Monday recover on Tuesday, and then just continue right back up. That panic was pretty big. And so one of the things that I think I am really thinking about right now is what happened in some of these previous trade war issues. So what I did in my research of trying to figure out what happened in the past, I went back and looked at some of my previous videos. I looked at some of those times where I was talking about the trade war, what was going on, what was being said between our president and the Chinese president. And what I saw was that these trade war issues last about a news cycle. They last 2 to 3 weeks, sometimes a month, and then it tends to get better. People tend to forget some of the bad things that are being reported in the media, and things go back to the status quo. The thing you need to remember right now with the markets and the way they are is that nothing has really changed fundamentally. Financially, all these companies that are reported earnings, they were pretty much for the most part good. I will say this, Disney recently reported earnings after hours today, and they lost by 23%. They were down 23% compared to what was expected, and that's really bad. Like, we're talking really bad. The crazy thing, and the reason why I'm really concerned about this market that we're in right now, is because Disney dropped something like 5% on a 23% miss. How does that happen? What? Yeah, it doesn't make a whole lot of sense, and that is why I am deciding that I'm going to be taking very small positions, and I would recommend this to you, whether you're in my private mentorship or not, is to take smaller position sizes compared to what you normally take. The reason being behind that is you cannot base all previous knowledge and the way previous trades have worked out on this style of trading in this kind of market. A lot of people do like to trade options during these times. Like, obviously right now, while the markets are very sold off, people are trying to buy dips, they're trying to ride call options up, or they are buying a lot of put options. You need to remember, especially as a new trader, and this is something you might not have seen before, and you need to understand, is that premiums, these options, the prices on buying these contracts go sky high because of the volatility in the market. That's whether you're buying a call or a put. Next thing I want to talk to you about is my trade that I had on Monday in Alibaba. So I bought Alibaba right at about 154.55, I believe it was. Took a few, I think I took like 20 shares, something like that. Nothing huge. It was like a $3,000 position. What I did with that though was I had a very hard stop at $54. Normally, and anyone that knows me and knows how I trade knows that as a value investor, I tend to hold a little bit longer and wait for the recovery. In this market, I do not believe it's a good idea to hold through and wait for a recovery, because I think after hours we could see one day, any of these days this week, where things continue to tank down. Now, I've been wrong. This strategy does not always work out perfectly, but my thing and why I think this strategy is very useful and very valuable is because too many people right now are going to start going, oh my gosh, we had this massive sell-off Monday. Things are going to be great. Tuesday, look, things were great. Wednesday, it's going to be even better. Thursday is going to be good. And then that's when they trap you. That's when what happens is everyone starts going along, and then the rug just gets ripped out from underneath your feet. If you did watch my video from Monday, you'll notice that Alibaba, AMD, and EA are some of my 3 top swing trades that I would love to go in long right now. With that being said, I'm not going to be a chaser. I'm not going to be chasing these stocks. And the reason why I say that is because, yes, they're a good deal, and a lot of people will watch that video and go, hey, they're a great deal right now. You need to pay attention to what's going on politically when it is such an important key to how the markets are reacting. Let me repeat that again. You need to focus on the political environment of the markets more than the technical analysis when the political climates are very important to the stock market. So what that basically means is you need to understand that those things are affecting the share prices more than what the actual companies are doing. If you can do that and you can manage your risk really well, you're going to do fine. You're going to do great. But my biggest suggestion to anyone that's fairly new in the market and you're watching this, take a break, take it easy. Too many impatient new traders get slaughtered because they see opportunity, and there is opportunity in this, I promise. But with that being said, you get slaughtered because you don't realize how quickly a reversal can happen just like that. 2 last things I really want to stress. Number 1,
hit that thumbs up button. Number 2, hit that subscribe button. And number 3, just be patient. Honestly and truly, that is my biggest suggestion from you watching this video. Be patient with yourself. Do not force yourself into trades that you believe are bad. Going along with my Alibaba trade, I got out super fast. I got out at $54. The reason I got out at $54 when I normally wouldn't was because the pattern was broke. And in a crazy market like this, if the pattern changes, you can't get into that long-term investing mentality unless it fits your long-term investment criteria. And that is going to be actually my point that I want to leave you with is do not confuse long-term investing principles with short-term investing strategy. Short-term investing, you need to have a set stop loss, a set point where you get out. Long-term investing, you have a sliding scale. You can average down. That's okay. When you are long-term investing, that's fine. When you are swing trading, you cannot not do that. So that is my suggestion, you guys. Catch me in the next video. If you have any questions, leave them down in the comment section. I want to know what you're doing right. I'd love for you to leave some of your advice during a volatile market. If you've traded for a while, leave that down there. Even if you're new, sure, ask some questions, maybe say what's worked for you. I would love to create a community where this is valuable, not only for the people that watch this tomorrow and the next day and the next day. I want people to be able to watch this a year from now and go, you know what, that was some really good advice and some good help that was down there in the comment section. So I will catch you guys in the next video. Talk to you later. Bye.